this is the stuff that is in the room. It's sort of the DNA of financial planning because we're trying to figure out how to afford a meaningful life. How do you underwrite the things that are most purposeful or meaningful for you? This idea that true wealth is the ability to underwrite a meaningful life. It's really what most people in the financial planning context want to talk about if they're working with a true financial planner. And so the question isn't if, but when and how do you have these conversations so that you, the advisor, can show up with your own authentic voice to lean into these things and make it land in an impactful way for the end client so that they walk away saying, huh, he or she really helped me lead their life.
Welcome to ReSolve Riffs. Everyone, please welcome Brian Portnoy to the show. Brian is a good personal friend of Mike's and mine. We might get into that at some point. But for those who don't know, Brian is the founder and CEO of Shaping Wealth. We're going to talk a lot about that venture today, I think. And has also authored several books, including The Investor's Paradox, The Geometry of Wealth, and laterally, How I Invest My Money, which maybe we'll also touch on today. Brian, welcome to the show. Thanks for coming.
Hey, happy to be here, be back.
It's funny because I was mentioning before the show that a couple of episodes ago, I had the chance to interview Dr. Robert Frank at Cornell. You were familiar with Dr. Frank. And he mentioned that he was sort of working directly with Dick Towler back in the 80s and as sort of the behavioral economics field was really gestating, really, and had taught one of the first behavioral economics classes at Cornell. I think he mentioned in sort of 1984 or something like that.
Mm.
Um, and here we are again talking about behavioral economics. And, it went through this sort of, there was a huge surge in interest in behavioral finance, behavioral economics. Then I think there was a little bit of disillusionment maybe for a time, and it's come surging back. And I know that you've been really one of those, both riding the crest of sort of behavioral economics 2.0, and I think helping to reinvent it. So, you know, maybe just walk us through your understanding of the history of this domain and why it may have gone out of favor and what's new about how it's been revitalized.
Yeah. Well, good to see you guys. Thanks for having me. It's a really fascinating history because when you step way back, it's really kind of a modern and somewhat scientifically rigorous exploration of the human condition. I think most of us know the origins, which was basically these two relatively unknown Israeli psychologists, Danny Kahneman, Amos Tversky, um, you know, thinking about judgment and decision making, and at some point looking across the world to the other side of the world, and specifically the American economics profession, and concluding that these people don't know what the hell they're talking about. Basically, that the way they were modeling utility curves, the way they were, talking about preference formation and expression was just off. And so, incredibly long but fascinating story short, they infused psychology into economic decision making, and that became known as behavioral economics. And it's not worth the nuances of behavioral economics versus behavioral finance and so forth. It's basically infusing psychological models of judgment and decision making into the economic realm. And then that broadened out much further. Where Thaler came in, which is pretty interesting, is that he Americanized it. He was this sort of young gun, super, super smart, who read, I forget the exact paper that he read. I think it was the one on loss aversion published in 79 or 84. And he was like, holy moly, like one of those mind blowing moments. And basically built the bridge from Kahneman and Tversky into the American economics profession. And fast forward, 25, 30 years, Kahneman won the first Nobel Prize, economic prize for his work in behavioral finance. Then Thaler won it a few years later. So it's pretty cool. So a couple things happened to, because I could go on about this. One is that it was the psychological models of judgment and decision making were bridged into the American economics profession and became very controversial in the best possible sense because it wasn't. I don't think it was an accident by the Nobel Prize Committee the other year when they handed out two Nobel prizes in one year, one to Thaler and one to Gene Fama, and these are like the twin pillars of sort of.
Schiller, I think, at Fama, right?
I didn't mean Thaler. I meant I
Yep.
yes. I meant Schiller, but nonetheless, also kind of a main guy in that field.
Mhm.
So it was controversial. It became very popular. You had books like Thinking Fast and Slow. You had books like Nudge. Other people like Annie Duke show up and write really interesting books about thinking in bets and how I decide. Guys like Dan Ariely made a name for themselves, writing a variety of books in this space, and all of this seeped into our world of investment decision making and really in financial planning over the last 15 to 20 years or so. And what happened was really kind of this weird, and this is my assessment, this is my take. I don't know how widely shared it is, but my sense is that partly through intellectual laziness, partly because of the focus of wealth management and financial planning, the industry here in the US became so singularly focused on what's known as biases and heuristics. Basically, the brain is hardwired to form a bunch of shortcuts because we take in more information than we can process. And so the brain literally builds like physical bridges over those massive pools of information so we can get from A to B a lot more quickly. And that's, in the thinking fast and slow world, that's the fast thinking that the brain does at the subconscious level. As this landed in the world of financial advice and how do I understand client behavior and why do my clients seem to be nervous when the market is volatile? Why do they want to sell their portfolio when the market goes down 20%? The industry leans so heavily into this enormously long list of biases and heuristics, biases and shortcuts. And it's really hard to use the word bias without having a negative connotation to it. So, what the financial planning, what the multi-trillion dollar wealth management industry did, and adjacent to the investment management industry did, was basically say our clients are flawed. They are irrational. And irrational is an economist's fancy word for stupid. Basically, our clients don't know what they're doing, and I, the smart one, am going to observe, diagnose, and maybe even fix. And my one of my co-founders at Shaping Wealth, Dr. Joy Leary, who's a PhD in psychology and practicing therapist and all around, brilliant person, she said the other year, we need to stop pathologizing normal human behavior. And part of what's happening in the industry now, um, because of firms like Shaping Wealth, because of a number of other, folks working in the space to um, bring forth so-called human first financial planning, behavioral advice. There's a whole number of ways to tag or label it. But basically, let's back out of the cul-de-sac that we've driven into, where we're spending a lot of our time talking about availability bias or recency bias or the endowment effect or loss aversion, not because these aren't real things. There are empirical manifestations of the quote unquote biases, but they aren't evidence of our flaws. They are actually evidence of our humanity. And if you're actually going to be a great financial planner, and I know many, we know many who care deeply about their clients, which is most of the advisors I've met over the 15 years I've been doing this part of my career, then let's just take seriously what makes us who we are, what makes us normal. And so, we're kind of into this, what I call behavioral finance 2.0, where the first version was about how flawed our clients are and how do we understand all of these mistakes that they are making. and instead pivoting to a completely different mindset, which is there's this beautiful mosaic of what makes us, sort of messy and flawed, but still very normal. And let's understand that so that when we help people with investing or saving or spending or any other dimension of our money life, we can show up really understanding where they're
Yeah, I think the seminal work in the field is something like Departures from Rational Choice with Regret or Without Regret or something, right? And there was sort of a 30-year arc of literature demonstrating how consumers, investors, et cetera, depart from the rational choice theory, which is the underpinning of, all of modern economics is founded on this Homo economist
coming.
vision of human behavior, right? And which has obviously been disproven. And there's kind of two different branches that one can follow. And I think the vast majority of the literature and the books in this field have kind of been written on either the branch you describe of these are the ways that humans are stupid or flawed or biased. And here are some ways that either as an investor, you can be more self-reflective, think in bets, that sort of thing.
Mhm,
Uh, or advisors, here's how you can try to educate clients out of their human nature, right? And so there's that whole element. There's been tons and tons of books on that by many of our favorite thinkers and writers, et cetera. And then there's another whole canon on what the implications of these departures from rational choice imply from a policy standpoint,
mhm.
and the foundations of our economy, et cetera. Right. So, I mean, I know because you and I have talked quite a bit, of your background is in political economy, that you're interested in all of these things, but shaping wealth is really recognizing the impossibility and probably just misguided objective of trying to correct for human nature, right?
Yeah. eh, So I'll say something, and I'm going to guess you know more about this than I do, but I've taken it as sort of a crude given for a long time that in rational choice theory, preferences are exogenous to the model,
Mhm.
meaning that what somebody wants is sort of a given. And generally speaking, the utility function is just upward sloping. In other words, more is
On
better.
wealth. Yes.
Yeah. 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 Right. In a financial context.
Yeah.
But
Mm.
generally speaking, more of something you think of good. If you think of something good, more of it is better.
Right.
And at least a couple things have happened in research. One is you had really seminal research from guys like Barry Schwartz, who wrote about the paradox of choice. He showed logical, but also empirically, he was able to demonstrate that there's actually a tipping point. That yes, we are hardwired for more, and there's a real neurological function behind why that's so. But at a certain at some threshold, and I don't, there's not really an algorithm per se, but in different domains, you get to a point where you become satiated. If it's in a choice context, you become overwhelmed. And to date myself, you get these Calgon take me away moments where it's like I just can't handle how much is coming at me. It's why, stores like Costco and Trader Joe's are so brilliant because those are sort of A plus demonstrations of smart choice architecture. The way you were brought into that experience and moved around. Anthropologists, psychologists have designed every footstep that you take in there. Nothing in those experiences is an accident. And there's a reason why we feel more calm there than going to Big Lots or the dollar store or maybe even Walmart. These are designed as very different experiences. So one path is to, kind of grapple with preferences being exogenous or endogenous, and how much of what we want is a function of the experience we're having. Okay, so that can get deep. Go there if you want. The other way to go is to buy into a completely different and relatively new field of psychology, which is positive psychology. So you've got, so So positive psychology was invented in the late 20th century by a guy named Marty Seligman, who was professor of psychology at the University of Pennsylvania. And he was deeply influenced by some of the post-war humanist thinkers in psychology. Maslow, is it Abraham Maslow? Albert?
Yep.
Yeah. We all know Maslow's triangle, and people in that field who focused on happiness and self actualization, and your preference for more isn't really, that you would take from the rational choice world, isn't really what's at issue. What's at issue is sort of the quality of the life that you're living. And in the Maslow context, hey, you take care of your basic physical needs, and then you take care of your psychological needs, and it goes up to the pinnacle of some form of true sort of present self actualization. Seligman, number one, acknowledged that tradition, and number two, wrote some pretty powerful papers, recognizing that the history of psychology mostly focused on our flaws. And a lot of modern psychology came out of World War II, where you had not only societies but individuals and families that were just devastated and broken. So you read something like Viktor Frankl's Man's Search for Meaning. He survived Auschwitz, right? And so he wrote from that vantage point. So a lot of modern psychology is analogous to the disease model of medicine, which is all we're doing is making sure people are less sick. And Marty Seligman comes in and says, you know what? Most people are okay most of the time. How do we go from good to great? He didn't say good to great, but that's basically what he was focused on. What's happening now, and we've leaned so heavily into this at Shaping Wealth, is to basically say that positive psychology 1.0 is behavioral finance 2.0. That if we can model and embrace a particular, a particular framework for understanding our humanity, and we can always lean on George Box, who years ago said all models are wrong, but some are useful. So we can draw useful models from positive psychology as to what it really means to flourish. And Seligman was his big idea was flourishing. His main book is called Flourish. If we could start with what does it mean for a human being to live a good life, to flourish? And then, secondly, include money among other factors or domains into that conversation. It kind of flips everything on its head. So we're not starting with making good or bad decisions about investments or navigating the stock market. We're starting from a very different place, and that puts the financial planner in a really interesting spot, and she can lean in or just walk away if it's not of interest, to say, yeah, I'm actually interested in my clients, often my friends, people I treat as well as I treat my family, to a life of flourishing, and I'm going to help solve the financial piece of that broader matrix. Behavioral finance 2.0 just really fulsomely absorbs all of these lessons from positive psychology. And I really think I mean, in my own book, literally, I think it's the most interesting thing going on in wealth management.
That's really interesting. That reminds me of the old story, Adam, of you start to solve a puzzle and you get the box out and you dump the pieces on the table, right? And people start with, hey, where are the edges? Where are the corners? So we can start the puzzle. They start down in the tactics, where the actual most important thing about putting that puzzle together is what's the picture on the box.
Mm.
And to me, that what you're speaking of is really kind of throwing the table over a little bit and saying, hey, what do you want the picture on the front of the box to look like from the standpoint of an actualization perspective, a Maslow's hierarchy of needs? And you actually have the ability to actually think about that picture before you even start piecing the puzzle together. And that kind of dropped for me there as you were walking through the positive psychology and actually thinking of the picture on the front of the box.
A really hard question that we all struggle with is, what do you want? Defining our goals is usually just some recitation of well-worn scripts that we download from society.
That's
Um,
huge. How do you shake that? Like,
well,
how do you shake that? Like,
I've got an
get married,
algorithm that
have
I
2
will share part of
kids,
today.
have a
Yeah.
house, and that's been like, how did I decide to do those things? I mean, I don't even know.
Yeah, well, I'm not gonna invite Adam to opine on free will. We're gonna keep this on the rails.
Mike might
And
have a few thoughts on that as well.
Exactly. That's a
I know
long
you both have thoughts on this. Okay. Um, let's anchor on the idea that for the last half to full generation, financial advice, financial planning, has focused on what is called goals-based wealth management. Okay. Part of this is a function of true financial planning going back to the 70s and 80s, and part of it is marketing spin from the wirehouses who over time are just looking for different ways to keep people in their seats to sell them sort of different investment and insurance products. So there's kind of virtuous and less virtuous framings of goals-based wealth management, but the practice itself is pretty straightforward and at least on its face, makes a ton of sense, which is, hey, what is your goal? And what is the typical problem that we're trying to solve for, at least in American wealth management? It is retirement. Hey, I want to retire at age 65 with $4 million so that at a 4% withdrawal rate, I can have the following cash flows and that can cover the cost of the lifestyle that I'm imagining. Like, what is wrong with that? Um, well, I don't need to say anything's wrong with it, but I could say that it's terribly incomplete and doesn't actually reflect the way the human mind processes goals, enjoys or not the goals when we actually achieve them. So again, nothing wrong with that exercise, but it kind of leaves wide open the fact that we haven't even asked or answered the question of why. Why 65? Why $4 million? Forget the withdrawal rate of 4%. That's a toggle. But we're not really getting to the crux of the issue. So there's a whole series of problems with goals. One of them, or what the big one is what psychologists call hedonic adaptation. The idea that, you achieve something that you want and the emotion that you feel isn't what you expect it to be. And to the extent that it might be something resembling quote unquote happiness, the intensity of that emotion is less than you wanted it to be, and the duration of that emotion is shorter than you expected it to be. And that we just are on this, hedonic adaptation, sometimes called hedonic treadmill. We're on that treadmill. So in, Mad Men, Don Draper says that happiness is that feeling right before you want more happiness. Like there's no, at a neurological level, there's no entirely getting off of that treadmill. And so how do we solve this problem if it even is a problem? Well, we ask why, and we get into deeper issues of so instead of starting with what, which is the goal, moving then to the how, which is the plan, we take a step back and we start with why. Well, what is the purpose behind the money that you've earned? How is it going to be fulfilling in deeper ways in what I call the geometry of wealth, reflective happiness, what Danny Kahneman calls life satisfaction, as distinct from experienced happiness, or what Danny Kahneman would call emotional well-being, which is that fleeting pleasure versus pain that we feel every day. You wake up in a good mood or a bad mood, but that's what we're really, most of us aren't optimizing for. Many of us hopefully are optimizing toward sort of those deeper sources of contentment. So we go from start with what, the goal, to start with why, which is the purpose behind the goal. And that's where, really interesting, powerful conversations can be had in your mind, with your partner, between client and advisor. Like there's so much good stuff to dive into there. And if you want to press it even further, and I'm going to push the industry in this direction when I have time to write more, but actually, there's something that precedes purpose, which is identity. And so start with what, go backwards to start with why. Actually, the end of the line is start with who. So the only thing I'll plant now, we can go into it if you want, is that we have multiple identities. I'm a dad, I'm a friend, I'm a business owner, I'm a dog owner, I'm a Steelers fan, I'm lots of things. All of us have dozens of identities, some tiny, some very big and meaningful. And our back to this preferences, exogenous, endogenous. Often we have preferences that are associated with each of those identities. And so sometimes it's not about changing your mind in terms of what you want. It's who do I want to be in this particular moment? And in some sense, our most valuable asset is our sense of who we are because we actually live through story, not through numbers. And so the financial advisor probably doesn't fully appreciate that someone is showing up with a whole stack of identities and in a really messy, slippity sloppity way are trying to optimize on different identities that money has a strong influence over.
How does someone engage themselves in asking themselves those questions and sort of try to keep at bay the pollution that would come from all of the um, sources of stimulus and messaging they're getting in every domain of their life? Are there ways in which people can create that kind of engage in that arc and keep honesty with themselves in that arc?
I think that's a personal choice. And, there are different personality types that are going to be more or less reflective, curious about this. I doubt there's anybody on the planet who hasn't thought about, the life that they want to live and forget financial advice for a second. I think we're all on some sort of path trying to figure out what all of this means. And so whether you call it religion or spirituality or just narrative, like all of us to some extent have bought into some story that makes sense of the world. And we're figuring that out. I mean, during the day where I'm walking my dog, I'm sending emails. I'm not thinking about this all the time. I would go more insane than I already am. But like this is the stuff of life. We're trying to figure it out. There's no doubt that like we're being just battered, and like to your point, with information and choice, and that's where decision fatigue and choice overload comes in. It's why we see an epidemic of anxiety and stress throughout wealthier societies. It's why the Surgeon General of the US earlier in 2024 issued a very large, highly evidenced report on the epidemic of loneliness that's being seen in the US, maybe in North America. Probably the saddest irony of our times is that we've never been more connected to each other via technology, and we've never registered a greater sense of feeling alone in the world. It's really quite sad. And so just quickly, and again, go wherever you guys want, but we bring it back to a financial planning context. This is the stuff that is in the room. It's sort of the DNA of financial planning because we're trying to figure out how to afford a meaningful life. How do you underwrite the things that are most purposeful or meaningful for you? It's this term I coined, funded contentment. This idea that true wealth is the ability to underwrite a meaningful life. It's really what most people in the financial planning context want to talk about if they're working with a true financial planner. And so the question isn't if, but when and how do you have these conversations so that you, the advisor, can show up with your own authentic voice to lean into these things and make it land in an impactful way for the end client so that they walk away saying, huh, he or she really helped me lead their life.
How do you train? Oh, well, let's back it up even further upstream. How do you recruit advisors with a mindset that is well suited to this type of approach? And then once you've recruited advisors who are impassioned about this way of thinking, how do you sufficiently train them to open the Pandora's box? I mean, a lot of the elements that are teased out in conversations about, and I'm just using the words you use about identity, about meaning, purpose, um, fulfillment. Like these are, there are, first of all, many different schools of thought within the profession of clinical psychology
Yeah.
about how to navigate this. Um, how do you how do you train people to be responsible in engaging on these topics, which can be very personal, very emotional, potentially very traumatic?
Mhm.
Um, it just seems like it's an unusual skill set and knowledge base in the context of the financial profession at large, right? And even deep into the advisory side of that space.
Yeah. So I'm drawing a really bright line around the advisory space here. I'm not talking about investment management. I'm not talking about portfolio managers. I mean, we can broaden the conversation to include that, but where I'm talking about is very
Plan.
much in the advice space. And so, I give a lot of talks and travel around the world a bit. And there's usually occasion in the talks I give to query the audience who here has ever felt like a therapist or a counselor. And there's a nervous giggle, and then 100% of the hands go up. It's never been less than 100% of the hands. And these could be broker dealers, let alone independent RIAs. Uh, so, you've got people there who are compensated for selling product more, they're not fiduciaries. But the fact is that according to the American Psychological Association, money is the most stressful topic in our lives every year. It's the topic that people want to talk about the least compared to mortality or marriage or religion or politics. Like money is the third rail that triggers all the things: fear, greed, envy, joy, hope, anger, regret. So we're going to take that as a given that it's this third rail, it's this lightning rod. And so here people show up in your office to talk about whether or not they should up, you know, the allocation on their mid cap value fund, or whether crypto should go into the asset allocation mix, or something like that. But it's my pretty strong belief that the only question most people are asking in most of these conversations is, am I going to be okay? Or the loved ones that in my life, are they going to be okay? It's rarely spoken, but it's often, sort of it's sort of what fills the room. So, Adam, I'm going to accept premise of your question by saying, yeah, this is heavy duty stuff, and you can get into a lot of trouble by beginning to have conversations about people's identity and meaning and purpose. Um, there are, you know, there is a field known as financial therapy, and there are pretty bright lines when you cross measurable bright lines when you cross into certain topics. But even before you get to that line, it's just a very sensitive space. So part of the way I think about it, part of what we've tried to build at Shaping Wealth in terms of a training suite and content to support those conversations is like, well, you're talking about this anyway. You're talking about values. You're talking about, it wouldn't be in any way awkward to say, well, what's important to you? And it could be, you know what? I love my time up at the cabin. I drive up 2 hours, I got this cabin on the lake, like, that's my happy place, and I wanna be able to afford that in the first place, or I wanna be able to extend on it so that the kids and grandkids can visit, like, that's pretty kind of normal, middle of the fairway stuff for a financial planning conversation. So in some ways, we're not over our extending ourselves. It's just that when we return to, what we mentioned a few minutes ago, that it's sometimes hard to say what it is that we really want. Do you really want that cabin? Are you, socking away? Are you making a lot of near-term sacrifices in your life for something that actually you might not want, and it's something that you feel like you should do but don't want to do, and there's other things that are pulling you? Those people can be better or worse equipped for those conversations by having at least a little bit of a sense of what makes us tick, sort of what are those underlying sort of frameworks for thinking about what drives our happiness, and how do those inform the types of questions that I want to ask. And underneath all of that, which is a different topic, is a whole series of skills that we can derive from emotional intelligence, where we are better listeners, we can demonstrate more empathy, we can show leadership, the whole set of skills that come out of EQ or EI. So yeah, it's heavy duty if you analyze it from a standing start. If you analyze it from the point of view of where most advisors are most days, which is in
Yeah.
a closed room or on a Zoom call where people are talking about their most intimate emotional issues, which do come up with, related to money, then it's like, okay, we got to backfill the ability to do this the right way.
Sorry to interrupt, but I did want to take a quick second to remind listeners that while we do absolutely love providing our audience with world class guests and weekly investment insights, we wanted to remind you that we actually do our best work outside of this podcast. And we try to do this by providing cutting edge, globally diversified, and systematic investment strategies that are designed to be broadly non correlated to traditional equity and bond portfolios. So we actually manage private and public funds, as well as bespoke, separately managed accounts for investors that seek the potential to smooth out portfolio returns in the long run. So if you do want to see that theory that we've been talking about put into practice, please do go ahead and check us out at investresolve.com. Now back to the podcast.
Yeah, you're there anyway, I guess is the
You're
point,
you're
right?
you're
Like
you're,
you're
you're
only in the seat. So let's train you up so that you can do a more effective job for your clients and also um, for your business, I guess.
Yeah.
Right.
Yep, yep. I mean, I'll add another example, because it seems to have landed really well in our community over the last year, which is that, thinking about change and how humans navigate change. It's a funny thing when you think about the 1859 Darwin quote, if it's even a quote, that, we survive not because we're the strongest or the smartest, but because we can adapt. So as a species, adaptation is the key to survival and thriving. But at the individual level, being reductionist, at the individual level, we resist change all the time. We get stuck in our ways. We engage in something called confirmation bias. We find information that reinforces the stories that we want to believe, and so on and so forth. And so, there are some very well articulated, powerful, well evidenced theories of change. The most prominent is called the trans theoretical model of change. It's a six part, depending on which slight version, there's a five-part, six-part, a six stage model of change in terms of, hey, I'm not even thinking about it, the pre contemplation phase, like thinking about it, but there's no chance I'm doing about this anytime. Then I'm going to prepare, and then I'm going to lean in, and then I'm going to reinforce whatever that behavior is, and it goes around. Whether you're an advisor or a coach or any sort of guide, you are helping other humans navigate uncertainty and change. Like, uncertainty and change just defines like our daily soup. And so what we seem to have done over the last 12 to 18 months is turn a light on to the fact that that financial planning is effectively change management at multiple levels and in some profound ways. And when you can articulate that for a financial advisor and say, hey, you know what? Here are some really straightforward frameworks. It's four parts or it's six parts, but it's not that complicated. And that there are things to listen for. There are questions to offer at this stage, but not that stage. And you can begin to think, God, why does it seem like the client's really into wanting to do this, but then they get good advice and they don't take it? There's all these different use cases. All of a sudden, like, we begin not to get into like deep questions about, your identity and defining the purpose in life, but recognizing that part of the human condition is both the resistance to and need for change. And there's ways to have better coaching skills along that line.
No doubt.
Is there
Um,
is there an
what,
example you can sort of provide there to bring it home?
Um, you know, I mean, there's so one example would just be, you know, over saving or overspending. So you think about the different elements of sort of our day to day financial lives. Um, something that we've seen just from the bottom up through the advisors we work with is that they frequently tell stories about clients who have more than enough money in retirement but refuse to spend any of it. So yeah, we've got a underinvestment and a lot of people who don't have nearly enough money to retire, but there is this cadre of folks, and it's millions of people who have been great savers. Like they built this habit to just sock money away. And we kind of have two stages of our financial lives, right? There's the accumulation phase and the decumulation phase. And many people do not make that switch very well. So, hey, you've spent all of this time saving and investing, and you've got a multi million dollar portfolio. And, you could do anything you want, but it ends up that, a lot of people end up passing away with way more money than the day they retired at age 62 or 65 because their portfolios grew well in excess of their spend rate. And financial advisors sometimes find this really frustrating because they're like, "Don't you see? Like you can spend $200,000 a year and you won't even nick the principal and the clients won't spend." So there's some change issue here. And it might be the case that their values are such that that frugality, that lack of spending is very meaningful to them. And that's who it is they want to be. But others want to change but can't. And so you can walk through this five-stage process of pre-contemplation, contemplation, preparation, action, and maintenance, because at each stage there are psychological markers, there are conversation topics, there are metrics. And today's not the day to put up a PowerPoint slide or seven, but like there's literally a wheel that people go around, and you could be trained on how to have those conversations in a more effective way.
Gotcha. That is a prevalent thing for sure.
Yeah.
Those who just, I've seen that so many times. They
Mhm.
just do. Like, it's just that the dog pulls.
Yep.
It is just a function of how they are. So one wonders if that's their identity and it's truly what makes them happy, or they would be happier in a different paradigm. But being
Um,
able to offer that up and help them work through that yeah, that's a lot of value add from a financial planning context.
Well,
and I think
historically, it has been true that um, it's the frugal, prudent savers
eh,
that have have a huge um, proportion of the wealth, right?
Yeah.
And there's to your point, I think there's like a genetic orientation component to that. There's a reinforcement component. It's worked well to provide the security and safety that they have craved or what have you, right? And so it seems, I don't know, strange to think that they would become somebody completely different in retirement than they were during their saving years, right? Um,
um, so I don't know if I don't know if I'd say strange, but the answer is just from the bottom up investigation. Some people will say, "Boy, I want to go on that cruise," or
mhm,
"I want to do that other thing,"
mhm,
but it just doesn't feel right, and they
right.
need a
Looking
conversation
for someone
partner.
to give them permission
We
almost.
also
Yeah.
see very frequently that in a marriage, partners have different attitudes toward money, toward saving, and toward spending. And so there's navigating that. So you've got two dynamics going on. And how do you bridge that gap?
Yeah.
These seem like, I mean, the more we put on these workshops and put together content on this, and the more see the way it's received, it feels like a really comfortable place to be in terms of coaching the coaches, because I fully appreciate that, like, those deep end of the pool questions as to, like, what is your deepest identity and what is your sort of most profound sense of purpose in the world, and how can we express that through your financial behaviors? Like, for some, that's a bridge too far. For others, it's not. They actually want to go there. But some of the other things that, we build and teach and share and grow kind of professional communities around. whether it's sort of how to be more empathetic generally in a social relationship, or how to think about change, or building mental models for how to talk to a client during very stressful times, such that, you're not just saying, "Hey, calm down." There's a certain, you're like, "Hey,
I
there's
always
that."
love that. I love when someone says,
Hey, just
calm
relax.
down when I'm losing it. Yeah, that's the most constructive thing that can be said at that time.
Yeah, calm
Adam
down,
Adam knows
TM.
that.
Yeah,
Yeah,
that's right.
yeah,
You're being irrational right now. Please.
yeah, yeah, exactly. Economists would call you stupid.
I suppose some of the sharing, I mean, as someone who's been an advisor in that role for quite some time in another life, one of the things I found um, that came to me naturally is just when you're an experienced advisor, you're speaking with a client and you know that they have too much and they won't spend it, providing them the ideas and experiences that other investors and clients have had, where, okay, you're not someone who spends it, but that means there's going to be all of this money to give away at the end, or to leave to people.
Mhm,
And why not provide them some of those funds now where you can observe them taking advantage of them and getting a leg up, versus spending it. If you don't want to spend it, it was a legacy you're going to provide on your death. What about doing something before you die?
mhm,
And being able to share those experiences and those ideas, because they're not, the individual client is going to have their blinders on a bit. If the average financial planner has 100 clients, and through time those clients do roll over for various reasons, you've got all of that experience that you can share. And if you've got the coaching around how to share it, how to help them through the change management, how to help them feel good about it in whatever way it is. Maybe it's, no, I don't really want to leave this to the kids, and holy shit, I'm going to leave them the money to spend. No, 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 no. I'm not doing that at all. I never thought of that. I'm just going to give this money and they're going to go to Ibiza. No, I'm going to Ibiza. So it really is, having the opportunity to share those experiences with others who are going through that with different clients in different situations, and then having the tools to convey that in a productive and positive way. I mean, that's
The word that came
significant.
to mind when you were talking, Mike, was creativity.
Right.
There's such an opportunity in financial advice, which can be such a tin-eared sort of, sort of mechanical exercise, to actually be artistic, to excite the possibilities that someone might not thought of, and to actually help them to execute on a path that they didn't even think existed. And by the way, maybe that isn't for them. Hey, let's think about this. Oh, not for you. Okay. Let's stay on the path that we were on, and that's fine. To some extent, you've done you're the job of a guide, and sort of the opening salvo for almost everything we do at Shaping Wealth, is that the modern advisor wears two hats: as a mechanic and as a mechanic, you're a technical expert in insurance and investments and estates and taxes and selling a business and retirement planning and all those sorts of things, absolutely non-negotiable in their importance. But at the same time, you're also a guide. You are helping other humans navigate uncertainty and change, and that lends itself to a completely distinct, deep, and broad set of skills that our industry is only coming to terms with. Okay, so that's kind of the opportunity that Shaping Wealth is sort of going toward. Our mission statement is four words: we train the guides. That's what we do. Like, you're a well trained expert in building portfolios, in packaging insurance, any of those things. And so I bring all of that up to say that it's not the job of a guide to tell someone where they want to go. It's to bring them along a path that they want to pursue. It's just hard for a guide to do that effectively if they themselves haven't sort of walked the path. So we lean pretty heavily into the self-awareness component to emotional intelligence. There's self-awareness, self-regulation, empathy, and social skills. The true source of empathy isn't trying harder. It's actually working on yourself and knowing where you're coming from to serve as a contrast, a foil, or companion to what somebody else is going through. We work with advisors on their money stories. Um, and it's remarkable. Josh Brown and I wrote a book on this, an edited volume called How I Invest My Money. And now at Shaping Wealth, we've worked with at least a couple or 300 advisors on their money story, meaning like what are your earliest memories? What values do you associate with money? How did you learn about these things? What was your first job? What did that mean to you? How do you think about your legacy? It ends up that I guesstimate that like between 80 and 90% of financial advisors I've met over the years have never once written down what money means to them. Never once. And we do these exercises and we got a lot of kind of offline comments like, holy shit, I can't believe I've never done that before. That was scary. Kinda didn't wanna do it, but I'm really glad that I did. And now I'm actually listening different to my clients because I have a different baseline than I did before that exercise in self-awareness. And so if we're training the guides, then, those guides have to understand kind of what their role is, which is to not say, "Hey, you should spend it all because," no, it's to help people explore the terrain that they probably don't have a clear map toward. And to me, that's a really virtuous thing to do. It's how humans can help other humans flourish or thrive.
So how do you operationalize this project, Brian? So you want to help train the guides.
Mhm.
How do you help to train the guides? What's the underlying mechanics?
Yeah, here we just sort of pivot into, I think, a relatively straightforward learning and development platform. I think of a lot of what we do as an investment in human capital. And here, where we are in the industry in terms of many factors, the nature of markets, the availability of investment product, um, ma- many different things, um, uh, AI, generative AI, which we'll probably talk about. The terrain is such that I think many advisory firms are saying, geez, our competitive advantage is our people. How do we identify the right talent? How do we train them? How do we motivate them over the course of their career? Um, because number one, it's in their best interest. Number two, they're going to be engaging with clients, and that's the lifeblood in terms of the good work you do and the revenues you generate. So, to increase the value of your human capital, you need learning, you need training, and we operationalize it, I think, in pretty straightforward ways. Everyone's supposed to call everything an experience now. I'll back off of the marketing spin. Like we have courses, we call them experiences, but we'll call them courses. And some boil down to a 45-minute or a 1 hour workshop. Some of them are multi-month, quite immersive, 20-25 hours of CE you will earn in those experiences over a 2 to 3 month span, where there's a lot of work to do. And we treat it as sort of a boot camp style experience where, hey, it's going to be intense. We're going to tell you that ahead of time. If you're not entering with a growth mindset, you're not going to enjoy this. And the 8 or 9 weeks that you spend with us are that's not the thing. The thing is, you are now prepped to be in the army, so to speak. The boot camp precedes being in the military. In this case, being a behavioral advisor. So we've got those sort of um, sometimes live, sometimes asynchronous courses, pretty straightforward. We've got a content and coaching platform called Compass. You are the guide, we are your compass. And it's in the last 2 years, I think we've created something like 950 original pieces of content, bite size, usable on 3 levels: for your own development, for building your team, and to engaging your clients. A lot of times, this gets back to behavioral finance 1.0. Hey, tell me something about behavioral finance that I can use in my practice. And what they're usually talking about is give me a technique to manipulate my client in a conversation so that I can keep
Mhm,
them in the portfolio.
mhm.
To this day, I just heard that last week from a potential client. I'm like, I know I've seen this movie. I know how this is going to go. It's just not a healthy. just not healthy pattern. When we think about content and practicality, it's, hey, you might learn something, you might develop your team in a particular way, and third, not first or second, but third, you can engage your clients. So that Compass platform, I mean, there's podcasts of different types on it, but there's shareable client content. We do a lot of work in the field of advisor well-being. um, as a side note, there's kind of a global low-key mental health crisis in the advisory community, for the simple but profound reason that advisors are being asked to do more and more and more under the banner of comprehensive or holistic financial planning. It is less transactional, it is more relational, it is less analytic, it is more emotional. And there's no Kevlar vest that protects the advisor from 5 or 8 or however many conversations a week, which for that individual, like when you go to the doctor and you're literally and figuratively naked, it's like, okay, this is my one day at the doctor this year. There's a lot going on for the advisor, for the physician. He or she is seeing 12 people that day, right? So everyone's showing up ready to, in some ways, spill the beans, spill their guts, and you're just listening to story after story, and some of it's good and some of it's a lot. And so what we're seeing, across hundreds of we've thousands of clients, but we see in hundreds of instances people just dealing with stress, anxiety, burnout, imposter syndrome, things like that. Um, in the classic metaphor of put on your, when the air pressure, goes
Drops in the
away, the
plane.
play drops, and put your own mask on first. Sort of the dark edge of being a servant leader is that you tend not to take care of yourself first. And so we see a lot of advisors in advisory firms who don't take care of themselves. So coming back to Compass and the resources that we provide, we have content, we have live private coaching session, group consultations that address advisor well-being. So we've sort of built, Adam, like this whole ecosystem of resources that advisors and advisory firms overall can, use in one way or another. And the last thing I'll say is that, yes, we have substantive expertise in applied neuroscience and behavioral finance and positive psychology, emotional intelligence, but we also know something about how busy adults learn, and that's a completely different domain. And so the Venn diagram of shaping wealth, where I think the good things are really happening, is at the intersection of the substance of it all and learning design. Basically, appreciating that there is a practice of experiential learning design, capital E, capital L, capital D. It's a thing. And that it's a better way for people to take on bite sized ideas, be taught those ideas, give a chance to play around to analyze those ideas, being given pathways and opportunities and spaces to test them out in the world, to practice using them, to come back to the group, to talk about that, and to repeat over and over and over again. So, sort of, many small things rather than big things. Seth Godin talks a lot about old school education versus new school learning. We love Seth Godin. We love new school learning. Education is didactic. It's me saying things to you. Hey, here's a list of biases, memorize them and use them. Learning is no. Okay, we're going to go process. We're going to go bit by bit through a process. We're going to tell you what that process is ahead of time so you have a sense of progress and milestones, and that you're going to actually learn this stuff by practicing it. Lo and behold, a lot of people don't like the practice because it's work. But for those who want to do the practice, um, it ends up that this stuff is very, very useful in their day to day.
Yeah, that is, I think, um, the whole idea of learning as a busy person and then learning and doing and learning and doing and having that constant loop. Certainly that's been probably the most effective way to have a little bit of learning consistently and persistently applied through time so that you can
Mhm.
actually build it into your own ethos is having the dump all of, oh, here's the 1 day course and here's everything you need to know with no follow-up is, uh, you know, certainly less effective.
Yeah,
That's pretty amazing.
yeah, yeah. We've given it some thought. It's hard though. It's hard because people are busy. And that's the whole point. So, to lean in
Yeah.
and do these things and then to
Yep.
come back for more.
And
Some people
keep it
can't get
interesting,
enough.
right?
Yeah.
Because you get people on it for a year or two, they get fatigued, they get other distractions, another shiny nickel shows up, and, you it's a yeoman's work for sure.
Yeah. Yeah. Yeah.
Well, look, speaking of practice and keeping it interesting, um, I know because those who've been watching this for a while know that I've been very interested in generative AI, language models, ChatGPT, et cetera. And so I was fascinated to learn that Brian, quite a while ago when Brian set out on this path, was building a generative tool to facilitate the learning, the practice, the compass,
Mhm.
et cetera. Uh, Brian, tell us about Lydia.
So Lydia is an always on, highly empathic companion with perfect memory and a lot of computing power who is there to help you as an advisor, or I can imagine any employee in a wealth management context, kind of navigate the day to day of improving the lives of others. So, in a sense, Lydia is the guide to the guides. And the vision, we're partnered with a really fantastic firm called Ally Studios, ALAI Studios. And, my friend and partner there, Andrew Smith Lewis, got a 25-year background in cognitive science and artificial intelligence. Basically, he's got 25 full-time AI developers and then a whole team of others. So his tech and our content have come together to form a series of conversation agents called Lydia. The reason it's called Lydia is that the first coin ever discovered was in modern day Turkey, what was then 2,700 years ago, the Empire of Lydia. So the first coin ever discovered was the Lydian coin, and so it's our shout out to sort of the human experience of money, the journey that we're on. The human brain is roughly 130,000 years in its latest software update. Money is 3,000 years old, and so there's kind of good reason why these things don't play together all the time. So Lydia is a guide to the guide, and she is fine tuned to be this sort of co-pilot experience where, for example, you're gonna meet with, the Millers or the Butlers, or the Philbricks or the whoever later today, and you're gonna be talking about legacy, or you're gonna talk about underspending, or you're gonna talk about kids' education, or you're gonna talk about purpose and values and beliefs, whatever it is. Lydia can, and in many cases will, be connected to your CRM, so it can have access to kind of the history of the conversation, and you can say, "Hey, this is what I wanna talk about." I'm thinking about their legacy and the way they're thinking about it. I'm not sure if I'm asking the right questions. Can we just talk through this? And so, it's Shaping Wealth. We've built many models, at the crossroads of human behavior, and financial planning. So those mental models are sort of embedded in a series of codices that inform the conversation agents and all the routes that connect them. And so you show up in a very simple sense, and it could be typing within a very short period of time, weeks. I think it'll be voice activated. Hey, I'm off to this meeting. I want to talk about this. What do you think? And she'll say, "Sounds great. Have you thought about this?" Or, do you remember that they sent you an email 19 months ago that said the opposite? Do you want to accommodate that in your conversation?" Depending on how you toggle kind of a hive mind thing, it could say, "Oh, this conversation with the Butlers is about this, but remember that lesson from the Philbricks that we learned there could be that trans theoretical model of change we use on Mike, who's so stubborn and won't change. You can maybe you can maybe use that over here." It can have all of these conversations. You can wake up on a Monday morning and say, "I've got 8 client meetings this week. Me and my paraplanner have prepared the agendas. Can I run all of them through you just to give me a second or a third set of eyes?" Absolutely. In other cases, you can role play, and we've really done a lot of work on that just in literally the last, like, week to 10 days. But, hey, I'm going to meet with the Bucklers to talk about their legacy. Um, there's some things in this conversation that I kind of want to say out loud. And basically, I don't want to talk to my colleagues about it because, be awkward. Can I run through my lines with you? And she'll say, sure, I'll be them, you'll be you. Or, hey, we could flip the table at any point and you be them and I'll be you. And you could see the conversation from both sides. There's an opportunity through other technologies inside Lydia to basically look at all of the conversations you're having as an individual advisor, or if you are someone running an advisory platform, you've got 34 advisors, each with 100 relationships. So you've got 3,400 families. You're meeting twice a year formally with each of them. So you've got 6,800 client transcripts and then some. Lydia can take an unlimited amount of unstructured data and basically answer the question, what are we talking about? What are the top 5 conversations across the entire platform? Would you like a blog on each of these every week in order to drive conversation? Would you like analytics on the quality of that conversation so that we can drive new training solutions? I mean, you guys, I mean, Adam in particular, you're 100x beyond where I am on the technical elements of this, but you begin to let your mind go as to what's possible here. It's basically another member of the team. Now, what's really cool is that, and the reason why Andrew and I get along so well, I mean, our vision is funded contentment for everyone, that wealth is a mindset that can be learned and coached. Andrew's vision is to amplify human brilliance, that technology can and should be used to bring out our brilliance and our creativity and to make life richer, not to replace us, but to enhance us. So, you begin to think of it through that lens. Lydia is not here to necessarily save you time as a first order problem. It's easy to imagine how she will, but in some sense, to go slower and to be more intentional and considerate and deliberate in the way that you are developing your career and in turn helping your clients.
Yeah, I had a chance to toy around with Lydia, and it is no toy. It is an extremely well conceived tool with a variety of different purposes, and you can see that there are different specialized agents within the Lydia framework that specialize in different capacities, training or a specific type of uh, topic within the training,
Mhm,
or analyzing the conversations that you've had over the past n days. You could allow it to get to know you as much as you want it to get to know you, with share with the system. And I really like that it does a lot of um, Socratic teaching.
mhm,
There's in a way that you don't see with most of the public facing commercial chatbots. Lydia starts with trying to learn more about the question that you're asking. So starts with,
mhm.
3 or 4 questions to get clarity on exactly what you want to achieve, and then is able to go in whatever direction makes the most sense to meet your objectives, only after learning more about what those objectives are. So
Yeah.
it's a really neat tool. It is not by any means off the shelf. It has access to um, knowledge that you can't get from a general chatbot. And it's also clear that it's not meant to be a replacement financial advisor in any way.
Mhm.
It is exclusively meant to be a potential guide, conversational partner, practice partner, mentor,
Yeah.
etc., to the guides themselves. So it's a very well conceived and well executed product, delivered well above my expectations. It was a really neat surprise.
Oh, okay. Well, good. I mean, this is the first time you've given me feedback, so I was quite nervous, and now maybe I'm slightly you reserve the right to hate it. Maybe at version 1.2 or something.
Yeah, yeah. Well, it'll be really neat when you're able to integrate the voice um, directly, so it could be more conversational. That will, I think, be a huge enhancement for a lot of advisors who probably are not, you know, don't love typing
Right.
and are
Right.
much more proficient with talking. Mm,
Yeah. Yeah. That's one feature that, you know, I think it's net a very good thing. The floor keeps rising. So
mhm.
as we go from Chat GPT 3 to 3.5 to 4 to
Right.
4.0, whatever is next after that, the power of the LLM, but also sort of the interface and the UI of it all it seems to my novice eyes to keep getting better. It feels more engaging with new release every few months, and so that to us is the floor. Because just to be clear, this is not kind of an encyclopedic treatment of financial planning. It's not A through Z. Hey, we know about tax law and investment theory. Like, no,
No.
we train the guides, not the mechanics.
Yep.
And so when it comes to humans navigating uncertainty and change, when it comes to humans making better decisions, forming sturdier habits, and ultimately focusing on their own happiness and contentment. That's what it's fine-tuned to do. And so it's tapping into, Adam, the mechanics. All of the LLMs are kind of on offer, and depending on the nature of the question, it routes into Anthropic or OpenAI or one of the other models.
Yeah.
So it's pretty cool, and I'm glad you picked up on the Socratic piece because we've had a lot of internal discussion around that because it's just a little moment of discovery where she says to you, "Oh, interesting that you're meeting with the Butlers about legacy. Let me ask you one or two clarifying questions." That accomplishes at least two things. One is it's more information. Two, you, the advisor, are feeling seen and heard and more fully engaged. Um, and there's a memory function to this. So my partner Andrew's got more than a dozen patents in memory retrieval and neuroinformatics. So over time, you, the advisor, Mike, done this forever, the more you use Lydia, the more she will just know you and your patter. She'll look at your speech patterns. She'll see what you're talking about, and she will have memory so that she can retrieve something that you said or thought or the way that you expressed yourself. Now, this is kind of all aspirational. This isn't 3 months from now or 6 months from now, but the power of the memory function in Andrew's stack and in Lydia in particular has just enormous potential where, like, she's just gonna be like, she works for you. She's just, your coach, your guide, your mentor, your buddy. Um,
Your therapist. There's been enormous surprises, I think, in the LLM research about how well it can serve as a therapist. And I did note how um, Lydia starts every conversation with, um, "Wow, it sounds like you've got a really exciting opportunity," or "Wow, sounds like this is a complex but interesting." Opportunity, or wow, it sounds like your clients are very frustrated.
Mhm.
Uh, tell me more about what they're saying. Like it really is remarkable how well it's fine tuned, and how you clearly have brought your own knowledge of psychology to bear very
well, you
effectively.
you you
Little
you
Stephen
guys
Covey
know,
in
and
there.
what's that?
Little Stephen Covey in there.
Well, it's funny. I mean, you and I, we hang out offline and have lots of goofy conversations. But as dear friends, we also know that that moment when you feel seen or heard by somebody else, just by the question they ask, or the moment of silence they offer for you to keep talking, for you to repeat back what someone has said to acknowledge that you've heard them, and is very validating. Um, it's kind of tinny to call them conversational techniques, but, like, this is kind of being a better person to others, and, like, why not fine tune, this Copilot experience to walk alongside you in that way? The normal ChatGPT 4.0 or Claude 3.5 Sonnet experience is great. Like, you say something, gives you probably good answer, and then probably with a few more prompts, you really refine it into something that's super powerful. But it is entirely driven by you. You hold all of the agency, and in some ways, Lydia is designed to be an experience where you can relax and exhale a little bit because part of she's your conversation partner. She's coming at you with questions.
Right.
She's acknowledging what you have said. So yeah, it's cool. And I mean, Adam, you're one of the first people to look under the hood, and we have a lot to do, but it's pretty exciting.
Yeah, I'm looking forward to seeing how the project evolves for sure. Um, well, why don't we press pause here and carry we can pick up the conversation the next time you're on, Brian. I'm sure that this won't be your last pass here. At least we hope it won't. Mike, do you have anything else you wanted to hit Brian with? Or Brian, did you have anything you
No,
wanted to mention?
No, I just appreciate you guys. I appreciate the curiosity and all the informed questions, and all of us are in our own respective fields and channels where we're all pushing hard to disrupt things, and it's just kind of cool to be in this sort of conversation, guys. Like
yeah.
Yeah.
And with some tools that you've got at your disposal to really create some significant change. I mean, it's pretty awesome to hear the discussion. Where can people find information on this? How do they get
He-
access to it? I mean, we talked about your various books that you've written and all sort of that thing, but they're like, well, how do I get to Lydia, or how do I get to
yeah, yeah.
how do I do it?
Yeah, so, meetlydia.ai. You can meet Lydia at meetlydia.ai. And, it's a microsite. There's some good information as to the way it's supposed to function. There's some video, demos on there to give you a the look and feel of the interface. Um, as a proper product rollout, that will happen. I mean, we're sitting here in late 24. That'll happen next year in 2025. So meetlydia.ai is that spot, and more broadly, shapingwealth.com. That's the one spot. I don't should I give out my blue sky?
Yeah, you
Yes,
should, of
definitely
course.
give up with blue sky.
I've never given it out, and I don't understand like the, the way they do it. But yeah, it's bportnoy.bsky.social. I don't know why I just can't be at
I think
Bright.
B Portnoy might do it.
Yeah, just B Portnoy.
Yeah.
So yeah, there we go. It's first time I've told anyone where I'm at Blue Sky.
All right. You
Beautiful.
heard it here first. Well, I mean, it's never a chore, always a pleasure to spend time picking your brain, Brian. So thank you so much for coming on Resolve Riffs.
Thanks, Pete.
Thanks.
I did want to take a quick second to remind our listeners that the team works really hard on these podcasts. We spent a lot of hours trying to get the right guests, and we do a lot of prep work to make sure that we're asking the right questions. So if you do have a second, just do hit that subscribe button, hit that like button, and share with friends if you find what we're doing useful.